All right, welcome back, everybody. As promised, got my good buddy Tracy Streich on there from Renter's Place. Tracy, thanks so much for being here, brother.
Thanks, Pete. Thanks for having me. I appreciate the opportunity to come on and just visit with you, and maybe something good comes of it. If not, we talk for 30 minutes and that works too.
Well, before we dive into it, you have given back to NARPM. You're now the RVP of 2025. You'll be an RVP, and you were also on the committee for broker owner. Is that correct?
That's correct. Yes.
And
So,
why give back to NARPM? Like, what's in it for you? I guess.
well, man, I'll show you. Where is it? I don't even know where I put it. I got this nice plaque from them that said 2024 Volunteer of the Year. And I mean, if you're not working for a plaque, you're not working for anything. No. So really, I when I found NARPM, I was just starting out in property management, and I didn't know my head from a hole in the wall kind of deal. It's just like I didn't know what I was doing. And I Googled and I thought I got to figure out how to do this property management thing. And I found NARPM and they were doing a conference or a broker owner conference in Vegas, and it was like 45 days away. And I was like, I guess I'm going to Vegas. And I didn't know anybody in NARPM, and I really didn't even know what NARPM was about, but I saw their agenda, and I thought, well, I could learn from just about every session that's on there because I don't know what I'm doing. So I really feel like NARPM took me from kind of an idea of property management to actually how to implement property management in a real way, that I could come back from that and like, okay, I need to do A, B, and C, and I need to do those right now because I've been doing it way wrong. Um, and so that to me was kind of a launching point in 2011, at my first broker owner conference. And then I went to conferences for years, broker owner, NARPM National. Didn't miss them unless I just had something going on, developed some relationships, and then got asked to get involved. Scott Brady asked me if I would be on his committee for broker owner. And I said, yeah, I think I can do that. And then he followed up with, oh, by the way, you're vice chair, which means you're chairman next year. Thanks, got to go. And he hung up the phone. I was like, what just happened here? But that's kind of what got me really involved is one, just being willing to do it, and then somebody asking. And
They
I,
we call
I
it in NARPM, we call it voluntold. That
Yes, I was definitely
voluntold
voluntold by
something.
Scott, and it was great. I really enjoyed my time on the broker owner committee and putting the conference together, and just like I really liked it. And then I got asked to be an RVP, coming on in that capacity in January for the Central Region, best region in the U.S. since that is the actual region that I live in. So I'm looking forward to being on the board and serving for another couple of years.
I concur. It is the best region because I was the RVP of that region a few years back, and I live in that region as well. So, all right. So we were at Broker Owner this past year, and we're having a drink, and you kind of make some like secondhand comment, like, "Oh yeah, I'm selling a house," and my ears perked up, and I'm like, "What do you mean you're selling a house? Like you got a rental?" He's like, "Yeah," and you said, "Yeah, I got a rental property," and about 45 days later, I own that house. Right. And so what I realized is talking to a lot of property managers, and this was me actually. I used to be an investor. Then I started my management firm, didn't buy a damn property for 9 years. And then I sold the property management firm, and now I'm back in and I bought some more properties. And there are so many property managers out there that are too busy to buy property, or they see all these deals come through, but they don't really even have opportunities to take advantage of them. So I know you have built an incredible portfolio of properties, you and Derek, your business partner. Tell us a little bit about how that got started, and then tell me how you really kind of flywheeled it and how you got it bigger. And I would love to get, if somebody's listening to this and they want to get into this stuff, how they go about
Well, so when you were happened to be listening, I don't know even who I was talking to. It just kind of proved my theory that there's a sucker around every corner.
it.
So maybe there's a house there, Pete. Maybe there isn't. No, I'm just kidding.
I've
Yeah.
seen photos,
So,
but I have not been there, so that doesn't mean that is the house. That is true.
yeah. So, I'm kind of biased when it comes to rental properties. I think the Midwest is one of the best places to buy rental properties because you can still get good and don't think I'm saying affordable housing from the words that are going around like we have an affordable housing stock. You can actually buy a house that is affordable in the Midwest, specifically for us in Tulsa, Oklahoma City, that you can buy, and it makes sense. When you actually run the numbers, our taxes aren't super high. I mean, I own properties where the annual property tax is $450. And that just kind of blows people away. Like, how's that even possible? I even ask myself that sometimes. But we've just kind of identified some areas of town that we like to invest in. And we own a lot of properties there. And occasionally I have, like, you bought that one from us. It was one that was in our portfolio. We had built up our portfolio quite a bit over like the last 5 or 6 years, really kind of prior to COVID. And I mean, I bought my first rental in 1999, and I had a handful of rentals, about 11 going into when I opened my property management business.
Mhm.
But then we got really aggressive on buying stuff and really ballooned that up. Uh, and I mean, people always ask, we've got these aggregators in our markets, like, Mind and Pure and Home River Group and Everdest, that want to buy your property management company. And everybody's always wondering, what's my company really worth and how much could I sell it for? And as I was telling you, it's like my property portfolio that I own is worth 5 times as much as my property management company. So I don't feel like I need to even worry about selling my property management company right now, because I've got this other portfolio of homes that's really if you want to call it, my retirement plan. I mean, it is kicking off income too, but I'm not really tapping into that at this point because I don't need to. But we grew that up to about, just under 100 homes. And then we just kind of started pairing some of them off, like the one I sold to you, and I sold one to your friend Vinny that you referred to me. And we've got quite a few out-of-state people that'll call and say, "Hey, I'm looking for something, need to place some money," and we help them find something. Sometimes it's one of ours, and sometimes it's not. Like, our portfolio now is where I'm not planning on selling anything else out of it. Now, if somebody came along and offered me something stupid, I would, but um, you know our portfolio is set now somewhere around, I think it's like 68 homes at this point, and that's kind of where we want to be. I like what the debt is on it. I like what the interest rate is on it, and we're just kind of like going to hang out there for a while.
So let's
Occasionally,
talk about
I have to talk myself out of buying property at this point. So
so let's talk about how you use the property management company to leverage in finding those deals, partnering with other investors. So how do do you find all those, are you able to use the property management company to help build your portfolio of properties?
absolutely. I think as the property manager, I mean, you're in a key spot to know a couple of things. One, if somebody wants to sell a property, they're if it's in our portfolio, they're coming to us and saying, "Hey, I'm thinking about selling." They're kind of saying, "What are my options?" Two, you know, we we know that we want to grow that part of our business. I train my staff. Then if somebody says, "Hey, I may want to sell," then they're going to come in and say, "Hey, I talked to Mr. Robinson. He's thinking about selling his property. You need to give him a call." Well, then I can go in to our software and look at the history of the house. I have a very intimate knowledge of this house. Like, I can look at what work has actually been done. Has it had a roof leak every spring when it rains? Or is this a solid house? Is it a solid investment? And we've got a lot of history on that house that I wouldn't necessarily have if I was just out on the MLS looking to expand my portfolio.
Yeah,
So
you can see
one,
how quickly does it lease up? Are we getting
right.
an asking price on the lease?
Yeah, what's the history of that rent been over the past 4 or 5 years? What kind of tenants in there? Are they paying on time? Just because it's got a tenant in there, is it one that's like, "Oh, we're always chasing this tenant. Where are they?" So, we can get a lot of history on that. And then three, we've got a relationship with that property owner, right? So I can then go to them and say, "All right, here's what I think. Just so you know," and I tell them, "I may want to buy your house. I may not be the right buyer for your house, but I'm a buyer for your house." And then we walk through it. So I say, "Here's what your house, I mean, you've already looked at Zillow. Zillow says your house is worth," and I'm just going to use easy numbers for us to do math with. Your Zillow says your house is worth $200,000. And I said, "But that's if it's on the open market. We've got a tenant in there that's got 6 months left on their lease. So are you willing to wait?" That's factor number one. No. All right. You want to sell it with a tenant in place. All right. Now we're looking at what's the rent because that's what an investor is going to look at. How much work does it need to be done? I got kind of go through this list of questions with them. Why do you need to sell? That's usually my first. Why do you need to sell? Do
What
you need a
what what
big
are
lump
what
of
are
cash or do you
what are
just
the
need to
range
get
of
rid of
answers?
it?
Yeah, what are the range of
Yeah.
answers you get when you ask them that typically?
Well, so I'll tell you, here's a specific one. This guy, he was stay-at-home dad. His wife had a really great job. They had three rental properties, 100% paid for, and they were bringing in about $1,000 a piece, so $3,000 a month. And she lost her job. And he's like, $3,000 a month is
Doesn't
not
cut
enough
it.
for us to live on. We need cash, and we need cash now. Like, okay, that's their answer. Sometimes it's, man, you've got so much deferred maintenance on your house and you've got peeling paint, you've got a roof leak. I mean, I'm talking to one right now. We had a big storm come through. It was already an older roof. They had huge trees around it. So some tree limbs fell, hit, and punctured the roof. And
Yeah,
a big trunk laid in on the corner of the house and broke the corner of the house. So now we've got a broken roof, siding ripped off, holes in the roof,
and they
and
don't have
they've
the
got
money.
no money.
Yep.
They're like, we don't have money. And the tenant's in there going, you got to fix my roof. And obviously, we're not going to fix it. I can't spend my money on his roof.
Right.
So he's in a bind, right? So what do? He needs to sell because he doesn't have money to
Got it.
maintain the house. So there's a various reasons. Had another lady, older lady, she and her husband had owned them for years. Husband passed away, and she's like, Tracy, I just don't want to mess with them anymore. But I'm really worried about, the tax implications. So I was like, okay, how about you own or carry it? Would you be interested in that? I will buy it from you and give you X amount of cash down, and I'll
And
just
give you a
own or
note.
carry it, and I'll pay you every month and you don't have to worry about anything. She's like, that sounds great. And we ended up buying five from her and she loves it. So everybody, it's definitely not one of those things that you can just plug into your system and plug it into Lead Simple or Apply and it just boom, 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 and it works like that. It's every situation is
Mm.
different,
Yep.
but you have to be able to take the time and talk to the owner, find out what they need, find out what they want, and then offer them like, and that's typically what I do. It's like, here's three scenarios. You can do A, B, or C. And I'm not your answer on A, and I'm your answer on B, and I can maybe be your answer on C. I mean, just set it up to where I mean, what I want them to do is say, yeah, you're the easy button, and I'll do that. But I want them to know what the other options are as well,
Right.
because selling at full retail may be the best option for them. And if it is, we want to help them do that.
I think the first thing you said, which was really important, is you have to train your team, and your team should know that if somebody's looking to sell, that they should funnel that up to you
Yes.
for to review it, right, to see if that's an option. And a lot of people, a lot of us property managers, when you're a solopreneur, you actually buy properties because you were talking to the owners all the time. And then when you throw
Hmm.
that layer of property
Right.
management in there, you're not talking to the owners, and then you typically can lose potential deals because your team's not trained or they don't have the relationship with that owner client, and then the owner just calls
Right.
and tells them, "Hey, I sold." Right, that's the worst thing that could happen. Is
Yeah,
right.
that's
I sold 123 Elm Street. Like, wait, what? You wouldn't even know you were selling 123
right.
Elm Street.
So there's that call comes in three ways. It's one like that call. Hey, we've sold the property. You're like, what? Like you should have given us a heads up or something.
Right.
Two, and the other one is two, I want to sell my property, and that comes in two factions. I want to sell my property and what we just talked about. Tell me what I need to consider, tell me what I need to do. Or I want to sell my property. I've already listed it with another
Yep. With
agent.
another agent.
Right.
Yep.
And you're like, what? Yeah,
Yep.
and you're like, we can do that. And they're like, oh, I had no idea. And like, did you really not? Or did I
Tracy,
do that bad of a job of telling you, or you just didn't listen? I don't know what the answer is.
my company name was Empire Property Management and Realty. And you'll be surprised at how many people never got past Empire Property Management.
Hmm.
And they would just didn't even know that we can list the homes from, that we can buy the homes, that we can like that we did. They had no idea. And that is
It's
extremely frustrating. So yes, because that's on us as property managers. Like we're not getting that
absolutely.
word out 100%. So have you done some deals with some of your clients as well, where you've created a fund or you've kind of partnered up, anything like that?
Yes. So we've done five syndications over the years. We don't have any active right now, so we've raised money,
So
bought
explain
homes.
this, explain the syndication to folks in case they don't.
Okay. So we identified a need. A lot of times the syndication comes like an apartment complex. So you've got 52 units right there, and then I go and call my friends. Hey, Pete, we got a 52 unit deal. Do you want to buy in? The minimum is 50,000. And you say, yeah, I want to do that. I'll put 100,000 towards that. We raise enough money to kind of cover the down payment, some operation costs, and then we go out and finance it with a local bank. Right. So you would be a limited investor on that kind of deal. And I would be, me and Derek, we'd be the primary investors there, and we'd be running the show, so to speak. So you just got your money in. The only thing at risk for you is your money. The loan is in our company name kind of thing. So, you pay out dividends, and when you sell it based on your shares, that's what your profit is. And we did that. We've done that about five times over the years. I don't know that the interest rate environment's that great to do something like that right now. A lot of syndicators are going back. Hey, Pete, I know you gave me 100, but we need another 20. And Pete's saying, what? What do you mean you need another 20? Well, those interest rates have reset and payments are going up, rents are leveling off.
Yeah,
So
especially because most of them are buying on a commercial loan, which
right,
usually resets after about 4 or 5 years, right? So if you
right,
do something in 2020 at the incredible 3% interest rate, now they're 7%, and you can't sell that property
right.
because your interest rate, you have to go and refinance the note, right?
Right. And that's what we did. And I don't know if you call it prognostication or I just got lucky, but kind of right before rates took off on their run, I looked at our overall portfolio when we were trying to decide what we wanted to keep and what we wanted to sell. And we went out and basically locked in some longer term rates on all of our stuff. Because, I mean, when you have 60 to 80 homes, you don't have, 60 to 80 Fannie Mae loans, right? I mean, those are commercial loans.
Right.
But we lock those in at a pretty low rate on a 10-year fixed term. So now I'm feeling really good about where we are. Like, I can just set them there on the shelf and not worry about them. But I think that for syndications now, that's really the rate environment's tough. But we had all five of those have been from raise money, purchase property, and resell the property. All investors get money back and profit. So we've taken five of those
And did
front to
you do
back.
that with apartments or did you do that with single families, multiple single families? How did you guys, what did you buy?
Um, Three of them were multiple single families, and two of them were duplex communities.
Duplex communities. So
Mhm.
like multiple duplexes.
Yeah, multiple duplexes where you got three or four streets worth of duplexes, and you've got, 36, 40 units total, just right there geographically close. The others were more of a geographic, river to the west, this street to the east, north-south boundaries, and we're buying within a specific geographic area as a target.
So, all right, let's talk about the houses, right? So you decide to
Mhm.
get buy 3 or 4 houses and you're like, okay, we want to go ahead and do this with a syndication.
Mhm.
What's the first step? Did you reach out to your clients and ask if they wanted to invest in these properties? Did you build a pro forma? Like here's what we can buy them for. Here's what we can rent them for. Here's when we're going to sell them. Like we're going to do a 5 year kind of blah, blah, blah. Take me through
Yeah.
the
So
process.
I think the first thing we did was we kind of floated the idea out there. Like, hey, if we did this, would you be interested? And we got enough people to say, yeah, that sounds like a good idea.
Okay.
And then it's putting together the pro forma and the paperwork. And listen, I am not a paperwork person. I had to lean
That's
heavily
Derek.
on that's
That's Derek.
Derek. But that's also in this case, it's like you're hiring an attorney and you're getting 15 to $20,000 worth of legal documents put together to make sure it's done right. Because I mean, if you're out raising money and getting people to contribute, millions of dollars to your fund, you got to make sure the T's are crossed and the I's are dotted and all that stuff. But it's what's the need, right? In this specific, so let's say on the single family side, we kind of identified this area of town that was, I don't want to say it's been up and coming because it's been up and coming forever. If you live
20
in
years. Yeah.
Tulsa, yeah. Well, but I mean, if you live in Tulsa, you know this neighborhood, right? It's very well sought after. But we kind of thought, you know what? We feel like it's got another Like it's been going up. We feel like it's got another rise. If we catch it right here, we can catch the next rise.
Okay.
And so it was a little sexy in that standpoint from the area. But what I found out is, when your pro forma says, hey, we're going to go buy these, and it's not 2 to 3 homes. I mean, we're buying like 30 to 40 homes. But when you limit yourself geographically like that, especially on that one, was a pretty small geographical
It's hard to
area.
find 30 or 40 homes, isn't it?
Dude, we had every home in the area under contract in 3 weeks, right? And then you're like,
Wow.
okay, now what, right? So it was a little longer build up to get them all bought. Whereas our next one we called the
Thus,
Midtown.
that's the reason why most syndications go after like one apartment building, right? I get
Right. So
15,
yeah,
two.
if you go to apartment building, or if I've got that duplex community, I'm like, I've got 18 duplexes right here, right now, and you can close them in one transaction. And that's why the syndications like to go after the multifamily stuff. There's a lot more transactional stuff to do a single family syndication unless you bought somebody's single family portfolio.
Right, right. That makes sense. So in your single family deals, you were buying 20 and 30 homes.
Mhm.
So were you doing the same deal where you just getting enough money to put the 20, 30% down with some operating costs?
Yeah, we basically went to the bank, said, "Hey, here's what we're doing. Here's the documents. We need a guidance line of credit." And they said, "Okay, as long as you are sticking to what you're saying you're doing, you're buying these streets, this geographical area, you're basically pre-approved at that point. You don't have to come and get every house approved with us. You're so we had $1 million in cash sitting in the bank, and we had $3 million in a line of credit. So the whole deal was going to be $4 million. I would
How
go
long did
out
you
and
help? How long did you have that $1 million in cash in the bank? Like because you're floating the idea to people,
mhm,
they're giving you money, and then you're going out and getting the properties, or are you going out and getting the properties under contract while you're getting the money? Like, is it like that
yeah,
choreographed? Like,
yeah, it's a little bit of both. So as people are saying, yes, I'm doing it, and documents are out to get signed, we're starting to contract properties because you still have a 30 to 45 day close window after you put it under contract. So I think what we did is we waited until we had like 25% of the cash already on hand. Because what we would do in that instance is we would just make cash offers on everything. Because we had the cash sitting there and say, hey, well, it allowed us to be pretty aggressive on some of them too. So we can make some low ball offers and say it's cash, we can close in a week kind of deal. Um,
and if
and
it's not, we'll do it. We'll put a note. If you're gonna buy it,
right,
if you allow me to buy it at this price, I'll buy cash. If it's this price, then I'll do a note in
right.
45 days. Got it.
Yeah. And if we bought it in cash, we just bought it, closed on it, refinanced it with our line of credit, put part of that cash back in the cash account and just kept buying until the cash was gone.
Right.
And so it was a range of like, hey, this could be 28 houses, this could be 38 houses. It kind of depends on where it all falls out with what we're buying. So,
So okay, so then let's fast forward. So you close, you get the money, you close on the houses. Obviously, that's like 20 or 30 like walkthroughs and contracts and dealing with different
yeah,
agents and dealing with all the different commissions. That had to be super fun.
right. It was,
Um,
it
and
was, it was a lot more work than from the beginning, from the paperwork to the purchasing to the even after we're closed, just the paperwork on the backside of reporting to all the investors was a lot.
and when you wrote the paperwork, how much did you guys take? Did you guys take typically it's like 20% of the deal? Did you guys take 20, 25% of the deal?
I think our deal on those was 15. I doing it again, we would have taken more,
Yeah.
but it's kind of like when you're first time around, you don't know what all's involved.
You give
And
it
like I
away for
said, there was
you get it all. You give a
right,
great deal the first time around because there's going to be
right.
eggs to break to make the omelet, so to speak.
That's it. And we didn't realize the work involved with it either. Like
Yeah.
again, the transactional side wasn't horrible because, it was really the same contract just over and over again. And we got to make the commission on that. So there was a little bit of like, oh, that's nice because we got
Right.
something right then. But once it's closed and it's different than sending out an owner report through Rentbind, right? Like, hey, here's your owner report. I mean, you had to then take
All the
those
properties.
all the properties, and
Yep.
it's not your typical owner report. They don't
Yep.
I didn't need to send them that we repaired the garbage disposal. They don't want that. They don't care, right? So it's a total different report. It's how much money is in the bank, how much money came in, what's your return, what's your cash on cash return. And you're doing that every 90 days, which is what we agreed to up front. I would
Right.
never do that again. We would be doing annual reportings and annual distributions rather
Got
than
it.
we were doing quarterly distributions. And that was,
That
I mean,
quarter comes quick.
you finish one and you're on to the next.
Yeah.
It's like, here it is. So
Yeah. The lease up and all that, was that, I mean, that's just like if you brought on 30 homes to your
yeah.
business, right? All that was the
Yeah,
same.
that was just regular. We just plugged that into the property management and it went into the machine. And that's why we did it. Honestly, it's like, what can we do? It was a growth option for us, right? Like, how can we get 30 new homes into our property management business? Well, we could be part owner on these homes and do the syndication and bring them in. So that was kind of the main driver.
Are you guys still holding these homes, or did you end up turning around and selling a portion of the deal? How
Um,
did that work?
I would say of those, probably 80% have been sold off to people we no longer manage for.
Oh, really? Okay, so you're not
Yeah.
managing homes anymore, huh?
No. So some of them, when we started selling off, some of our owners bought them. We bought one or two. I mean, there's still some of them dispersed throughout the portfolio. But the duplex communities you get, I mean, you don't want to sell those one at a time, right? That's like you do on the
How to
single
sell?
family. So we want to sell the whole thing, and you had some out of state investors buy those, and you know,
Did your so the one thing that I worry about is like if I had clients, they end up getting into this syndication. The syndication doesn't give the return that we anticipated. That could affect your relationship with them when in the other homes that you're managing.
yes.
Did you have to deal with any of that, or you guys actually ended up
Um,
doing pretty good on the returns?
we made money on all of them, so that didn't at that time, but that was always in the back of our mind. Like that's an
Yeah.
additional stressor going into it that you're not thinking about because typically it's not like a Wall Street deal, right? Where I can just get online, I'm going to buy some Walmart stock or something, and then if Walmart loses money, they lose money, and they're not worried about me.
Right.
They're worried about Walmart. Whereas, if Pete's going out and raising money, you're the first people you're calling are people you know, right? So there's that added stress of I do not want to lose my friend's money, my brother's money, family money, whatever. So it adds a little bit more stress on there that you're not really, again, I don't know that you're prepared for that going into it, but it's real.
I had a deal. My first deal I did was an apartment complex deal, and I ended up losing the apartment complex. And I was a passive investor, and but I brought my mom in on the deal. And the only
Mhm.
thing worse than losing your money is losing your mom's money.
Yes,
That is
exactly.
literally
That's it. That's what you're worried about the whole time. You're definitely worried about that.
Yep. All right, so we got a few minutes here before we wrap up, and I want to talk to you a little bit about because so I am now a client of Renter's Place, and
Yes.
because I bought that property in Tulsa, so I wasn't gonna like say thanks, Tracy. Do you know anybody else besides you that can manage it? So you do manage my property there, and the one thing that I thought was really just super streamlined because I don't know anything about Oklahoma or Tulsa.
Mhm.
I didn't have an insurance agent over there. And you're like, don't worry about it, Pete. We have insurance taken care of if you want to opt in. And it's actually pretty cheap. It's actually cheaper than obviously
Yeah.
cheaper than like properties in Houston because you guys have tornadoes, we have
Well,
hurricanes, floods, ice, everything go down here. So tell me a little bit about how you guys set that up and do you get a lot of positive feedback? Is that able to do are you able to market that? Like, do you actually get clients because of that? Like things of that nature. Just talk to a little bit about how you structure that.
yeah. So again, it was kind of something we started for ourselves because we had a big group of properties that we wanted to get insured. My business partner, Derek, has an insurance background, as you know. He was a farmer's agent for 22 years. But when I'm in the Facebook groups locally and people ask insurance questions, my quick and easy answer is for rental property, if your insurance company has a commercial on Sunday during the NFL football games, they're probably not the right company to insure your rental, right? They may be great for your personal property and auto and stuff like that, but rental is really one of those subcategories where you really need a specific rental property insurance policy. So we got a master policy in place, and I compared it to like high risk health insurance. If you go to the doctor, just pay the doctor for the doctor's visit. But if
Yep.
you go to the hospital, you've got coverage. So, and that's kind of what I explain these as. So we like to carry a higher deductible. Like on my personal properties, we carry a $10,000 deductible. And I think we've got a master that's got a five and a $10,000 deductible. So you got a little bit of choice. I'm not sure which one you were on, Pete. I had to look it up. But if I've got a water leak and something busts under the sink, I don't need to file an insurance claim to dry out the carpet, pull it back, dry it out, do all that stuff. We've got handyman people who can do that for cheaper than it is probably for my deductible even
But if you
on the
got
regular
fire and it
policy.
burns the whole damn thing down, now we
Then
got,
I've got coverage,
yep,
right? So, and it's a stated value with a minimum versus a this is what you're insuring it for. So you call Allstate and they go, okay, well, that's a 1,250 square foot house and you've got to insure it for X amount of square foot and it's got this. And they ask you all these questions. And next thing you know, you're like, okay, I paid $185,000 for this house, but Allstate's telling me I have to have a $325,000 policy on this house
right.
because that's what they say. Well, on ours, you can just say, okay, it's 1,000 square feet and it's $1.05 square foot or whatever, and that's your insured value. So you can insure it for whatever you want to insure it for. And now, if you've got a loan on it, then obviously you got to at least insure it for your loan amount. But then it's nice and easy. They don't. I mean, you were in property management. How many times did you get a call from an owner that says, "Hey, my insurance company needs a photo of the front, the back, and the electrical
Yep.
panel." And I'm
Yep.
like,
More
well,
times than we
well,
care of it.
yeah,
Right.
how about you tell your insurance agent to do his job and get on out there and take those pictures? Like that's not my job to do, right?
That's right.
But we don't have to with the master policy, we don't have to deal with any of that stuff. We just say, all right, Pete, here's the formula, bam, here's the premium. Do you want it? Yes, bam, we bind it. And then we just pay that for our owners every month. Just take it out of your rent. We pay it. And it's for us, it's kind of a retention tool because we have had clients go, well, I'm thinking about going to another property manager. I'm taking my two houses. They're going to save me 12 cents a month, how these owners are.
Oh
And you're
yeah.
like, oh, well, great. But, you can't be on our master policy anymore. So you've got to get new insurance and it'll cancel the day you cancel your contract. They're like, what? Well, that insurance was,
Cheap.
2/3 less than what I was going to be paying. You're like, yeah,
That's,
that's
yep.
part of the deal. I mean, it's
That's
part
the
of the
value that
service
we
that you
bring.
get. Yeah, it's a value that you get for being a client of ours.
Yep.
So that it's caused some people to pause and rethink. Some people say, "Yeah, forget it. I'm leaving anyway." But they don't get to be on our master policy if they're not our client.
Do you use that in your marketing as well? So you use it as a retention tool. So you've trained the team to let them know,
Mhm.
hey, you're leaving. This is
Yes.
something that you have to think through, right?
Yeah. Part of the offboarding process for sure.
Yep. And then on as far as marketing, you guys leveraging this into marketing at all?
So I wouldn't say that we like market it market it. No, our BDM does discuss it when somebody calls in.
Sales
So
call, but more
yeah,
sales, but not
yeah,
marketing. Okay.
right. Yeah.
What's the minimum number of properties you have to have before you can have an umbrella coverage like that? Or
Yeah.
master
So if
policy?
you're just a regular investor and you want to have your own master policy, some companies will do it with as little as 10 and some people want 20. So this gives our owners the option to be a part of our bigger master policy, even if they only have one, like you.
How did you so when you because you guys were able to leverage your own properties because you had the minimum amount.
Hmm.
If
Yeah.
I was a property manager, let's say I'm managing 50 doors or 100 doors,
Hmm.
but I only own like one or two. Um, what would you recommend that they do? Do I just send an email out to all my owners? Do I make a phone call? Do I say, hey,
No,
master policy here? Like what do you think the steps should be?
so I would say if somebody's interested, they should call Derek because I mean we also had this all the time. Well, I've got my Allstate agent in my market wants to do this for me. I'm like, it's just not the way it works. It's not a policy that they're going to have. These are carriers that are not you as a regular property manager will never come across a carrier like this. So your insurance agent already has to
Even
have
at the NARPM events, you don't think some of these insurance guys?
some of those may, right? But there's very few carriers. I mean, there's probably like three carriers in all the US that are going to do this.
Wow.
So those guys, I mean, you see a guy at table A and a table B and a table C, and they're, Bob's insurance and Mike's insurance and Jerry's insurance. They're all going to the same carrier for that product because they are very specific products
Yep.
that it's not, they're called non-admitted products in states. So an admitted product would be State Farm, Allstate, all that. They go to your insurance commission and say, hey, we're going to do home and auto and all this, and everybody can bundle. And that's those are the insurance for the masses, so to speak. So a non-admitted product would be something like this, or something that property managers already use, like tenant liability insurance. It's a very small niche, so it's not regulated like that at the state level, like an admitted line would be.
Yeah, the insurance guys that are out there, like RIS Solutions
Mhm.
and Shore Vesta or things like that, do they have them? I'm not actually asking because I don't really know. Do they have
Yeah, I
master
don't,
policies, or do you know?
I don't know if they have a master property policy or not.
Okay,
Yeah, because
figured.
most of those at the conferences are targeted towards tenant coverages or an owner protection coverage, um, but not necessarily property protection.
Got it. All right. All right, Tracy, we are up against it. I'm going to take a quick break here, and then we're going to come back for the lightning round.
All right,
We need NARPM to buy me some lightning, whatever emojis or whatever.
some sound effects.
The
Yeah,
sound effects. There you go. All right, we're right back, everybody. All right, welcome back, everybody. We got Tracy Streich, the NARPM Volunteer of the Year, and RVP 2025, the Central Region, on the lightning round hot seat. Are you ready, brother?
I'm ready. And just so everybody knows, I have not been prepped for any of these questions.
That's right.
So
But because you're a longtime listener, you probably know some of the
yeah,
questions.
I may know some of them, but I think you change them up a little bit.
I try to. All right. What PM software do you use?
Rent vine.
What is your org structure?
Oh, just you define what you mean. Like at our company, like are we portfolio? We're we're
hybrid,
we're kind of a
pod,
high, I would say we're a hybrid.
hybrid.
Um, but we are very departmental leaning.
Are you moving that way as you grow the business? Are you moving to departmental?
Yeah, I mean that's where we are right now, but we do have some crossover. That's why I say we're a little bit of a hybrid.
Got it. Do you use virtual assistants?
Yes.
Okay. What just couple of what are you using for? What a couple of just one or two like little jobs to use.
So we have them do a lot of invoicing, specifically utility bill invoicing. I don't know about a lot of property managers, but we'll get a stack every week that's 3 inches thick.
Yep.
Plop it in there, scan them, make sure they get a to the right account. We do a lot of project-based stuff. If we've got, all right, we need this done, we'll assign it to one of our um, remote team members. We just hired a maintenance coordinator as our most recent hire. We use this company. I don't remember what their name is, VPM Solutions or something.
Ah,
They did a great job.
thank you.
We
I didn't even know. I'm guessing you worked with Leon and
worked with Leon and we did the full gold glove. And you didn't ask me to pitch this, but I just want to say that was the easiest process that I've ever had. And I loved it. Because I,
oh,
I looked at I looked at all the thousands of people that I could go through, and I was like, "How about you just tell me the top five?" And he did that, and we got it down to two really quick and one really fast after that. And it was a great and easy, smooth process. Leon did a
awesome.
great job.
Thank you for that. Do you use BDMs?
Yes, I have one full-time BDM, and
What
then I'm the backup.
the backup still? Yeah.
Yeah.
What is one piece of advice you would give someone just starting out in the PM business?
If they're just starting out, I would say join NARPM. And if you've got a local chapter, get involved. If not, get to some of the conferences and develop relationships. I mean, if you go to a conference, you can't help not develop relationships. I mean, you'll be sitting at a table with people at lunch, during sessions, going to evening festivities. You will just get to know some people. And it's great to have somebody, specifically for me, I loved having some people that were not in my backyard that I could call. Like I could call Pete or I could call Somebody in California, I could call somebody in Florida. I call Trent Ratliff all the time and say, hey, what do you think of this? Just to have other people to bounce ideas off of.
Yeah, and agreed. And we connected years ago, and I actually flew to Tulsa and checked out your
Yeah,
office, if you remember that,
yeah.
when I was just getting started. So, and I appreciate you for that. What was your first job?
I mean, my first like job that's not really a job was mowing yards. And then as I moved into high school, I worked for a guy in a construction company. Um, and then I still remember my first, what I call real man job was after my freshman year in college. My buddy came by and said, hey, they're laying a gas line out by the lake and they're hiring. Do you want to go out and see if we can get on it? I was like, and this was the kicker. He goes, they're paying $6 an hour, which back then was like, whoa, $6 an hour. So we went out
God.
there and got on the gas line laying crew. And
Wow.
my buddy Carrie and I were the only, and there were probably like 35 people. We were the only two that hadn't been in jail at that. So I was like, man, this is a different.
You were
This
still young.
this
You were still young.
yeah, we still had time. We still had time, but yeah, it was an interesting experience.
Does pineapple belong on pizza?
No,
If you had to, what's your go-to for fast food?
Chick-fil-A.
Yeah, man of my own heart, both
I
answers.
love Chick-fil-A.
What is something that most people don't know about you?
Oh, what do people not know about me? I have a master's degree in social work,
For real?
which I think, yeah,
I didn't
there
know
you
that.
go. Shocking. I think most
Shocking.
people don't know that now that I'm a business person, I own my own business and property management company deep in real estate, but I have a master's degree in social work. I
Wow.
thought I was going to save the world and be, and Pete, how does that make you feel? I was going to be doing
We're
therapy
gonna
every
end this.
day.
We're gonna end this lightning round real quick right now. Uh, what's a book that has impacted your business or life?
Well, I'll say this. I think most business books that I read all sound the same, and after three chapters, I get bored with them. So this is kind of a weird, nobody's probably ever said this. It's called The Incredible Story of Blondie Baruti. And
Okay,
have you ever heard of it?
I have not.
It's about a kid who grew up
Sounds
in
fun though.
grew up in the Congo and like with his mom was running from the genocide to escape to another country. And he was very tall and very athletic, started playing basketball and would walk, like 12 miles to practice every day. Finally made it over to the United States, played college basketball, and then wanted to be in movies and film and ended up in one of the Avengers movies. Just a great story of overcoming incredible, not like us overcoming difficulties. Like
Right.
what difficulty have I overcome today? Like I waited, the Chick-fil-A line was really long and I had to wait 9 minutes instead of 6 minutes. Right. Like real like life and death things that he had to overcome to make it to where he is now. It's just very inspiring.
That is awesome, man. All right, last question. Dogs or cats?
Dogs, 100%.
Okay.
Sorry to my son who has two cats. They
All right, you're out of the lightning round, man.
Whew, I made
Uh,
it.
if any of the members or anybody listening wanted to pick your brain on anything that we chatted about, what's the best way to contact you?
They'd probably get me on one of the various platforms of Twitter, YouTube, X. No, I'm just kidding. I'm not on any of this. Um,
I was like, wait a second.
you can send me an email, Tracy, Tracy, at rentersplace.com or Facebook. I'm on Facebook, but I'm not on a bunch of the other stuff more than like once every 3 months. I kind of like, oh, what's going on over here? But I'm not a big
Yep.
social media guy.
Same here. That's funny. Yeah, actually, I just found like a LinkedIn message because I haven't gone on LinkedIn in like a week and a half, and somebody like emailed like two or three times, like, "Hey, I need help." Like, oh shit, sorry. Uh,
Yeah,
well, thanks, Tracy.
I sent you a message on MySpace. Have you got that yet? Is
No, I
that
don't. Couldn't have sent
that
me a
was
message on MySpace. That account had never got created. Well, listen, everybody, if you are thinking of joining NARPM, please go to NARPM, NARPM.org, or give them a call at 800-782-3452. And if you want the Gold Glove experience, like Tracy got, and you're looking at virtual assistants, you can browse over 38,000 virtual assistants. We can also help you with that. Go to vpmsolutions.com or email me at pete@vpmsolutions.com. Tracy, thanks so much for being here, buddy.
Pete, I appreciate it.